The United States and Canada trade war just escalated. It started when Canada said that they will potentially shut off electricity to the United States. This sent the stock market falling. Then Trump responded by saying, we're going to raise tariffs on Canada. This sent the stock market falling even further. Then Canada said, okay, we don't want that to happen. We will remove the electricity surcharge on the United States. This sent the stock market rallying because people were hoping now that this trade war would calm down. And then Trump responded by saying, thank you, but we might still raise tariffs on Canada, which then caused the stock market to fall again. The roller coaster in the trade war translated to a roller coaster in the stock market, which had a lot of investors confused, especially after we saw one of the worst days in the stock market since 2022. So let's break down what's going on, starting with what happened on March 4th. On March 4th, Trump brought back the 25% tariff on Mexico and Canada with the additional 10% tariff on China. Then 2 days later, on March 6th, Trump then paused tariffs on goods and services that are compliant with the United States, Mexico, and Canada trade agreement for 1 more month. But some countries were not happy. China still responded with a 15% tariff on US goods, including chicken and pork. And Canada responded by imposing a 25% tariff on American goods up to $30 billion worth of stuff. But then things started to get a little bit more heated yesterday, because then Canada came out and they announced this electricity surcharge on the United States, which would include states like Michigan and New York and Minnesota. And when this electricity surcharge of 25% was announced, that was when Trump announced with reciprocal tariffs again on Canada, saying if you put this electricity surcharge on us, we're going to raise tariffs on Canadian steel and aluminum by 25 to 50% on top of what we have now. Then Doug Ford, who is the governing head of Ontario, went on to CNBC and threatened to potentially shut off electricity to the United States. He said, quote, is a shut off a tool in our toolkit? 100%. And if he, Trump, continues to hurt Canadian families, I won't hesitate to do that. Well, then Canada had some discussions with the United States, and Canada came out around market close time and said that we are not going to continue with this electricity surcharge on the United States. So they essentially removed that additional 25% fee that Americans would have to pay on electricity. And then Trump was asked, what does this mean for you and tariffs? And he said, well, we might still raise tariffs on Canada. And that was why we saw the stock market fall again. It is a wild news day. It has been a wild roller coaster. I had to record this video multiple times because the news kept changing. And this is where now a lot of investors are confused as to what this means. Now, there's a few things I want you to understand. Number one, there's a lot of things happening very fast. And an easy way to stay up to date on what's happening is Market Briefs. Market Briefs is my free financial newsletter where every day my team is breaking down what's happening in the markets into a free newsletter. It's read by hundreds of thousands of investors. You can read it in less than 5 minutes every morning. So if you have not joined Market Briefs yet, I have that link for you down in the description below. The second thing I want you to understand is the importance of staying calm, because emotions are the enemy of profits, and there is a ton of emotion, anger, excitement, scaredness, panic, and it's all happening in one day because things are moving so quickly. And at the end of the day, what Wall Street understands that the average person misses out is anytime a big decision happens, Wall Street is paying attention to one thing. They're not paying attention to the emotion. They're not paying attention to the excitement or the fear. They want to know, where is the money moving? And that's the way that I want you to think. Because what investors and financially savvy investors want to do is they want to own a piece of the economy. More specifically, they want to own a piece of where the economy is moving. And anytime you see a change happen, whether it's through a government policy, a new technology, or a trade war, what that means is money is going to be moving. Now, most people want to argue politics. Most people want to argue with emotion. Most people want to just get angry. But that's not going to help fuel your bank account. And what Wall Street understands is every decision moves money. So when you have the news that trade wars are happening or that these tariffs are happening, that always moves money. And what I want you to think about now is the opportunity. And this is where you have to know your investing strategy. So now we've talked about staying calm so you can understand what's actually happening. But before you actually implement your strategy, you have to have the money to invest. Because you can see the greatest and best investment opportunity right now. But if you don't have the money to invest in it, it doesn't do you any good. So you got to have a money system so you always have money to invest. So you stay calm, then you get your money right. I've been making these videos for almost a decade on YouTube now. And so hopefully if you've been watching, you understand the importance of putting money aside to invest, putting money aside to save, to protect you against an emergency, and then not spending all of your money. Once you do that and you have money to invest, now it's all about figuring out what your strategy is. And if you are a long-term investor, meaning you have years, if not a decade plus, in your investing horizon, the day-to-day swings don't matter. And as a passive investor, what you're doing is just investing in the American economy. And every time we go through a downturn, we hear the same things. Number one, people say this time is different. Number two, people say it's not going to recover. And number three, people say, I need to get out while I still can. It's what we saw in 2022 when people were talking about the debt crisis. It's what we saw in 2020 when the pandemic hit and everyone was talking about how the markets were going to collapse. It was the same thing that we saw in 2008 when the whole financial system collapsed. It was the same thing that we saw in 2000 when the dot-com bubble burst. And each one of these market downturns, everybody said this time is different, that you need to run away, don't buy. But the financially savvy investors who cut through the emotion and found good investment opportunities were able to come in, buy great investments at a discounted price. See, the interesting thing about investing is this is the only place where when things go on sale, people run away. When Macy's has a sale, people line up around the corner. When Amazon has a sale, people will take time off of work so they can buy things online. But when you see the stock market having a sale, when you see the stock market having a down day, people panic, they freak out, and they run away. And I get it, especially if you don't have a ton of investing experience, a ton of investing knowledge. But what you have to remember is if you believe in the long-term health of the economy, especially as a passive investor, what's happening in the day-to-day does not matter. What you want to do is own the economy for the long term. Now, I get it. I'm not a financial advisor. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. But you got to know the game. If you are investing in the American economy, what we've seen is that time and time again, we have seen markets go up and down. 2022, the stock market fell by 20%. 2020, the stock market fell by around 40%. 2008, the entire financial system bust. In 2000, when the dot-com bubble burst, the NASDAQ really got hit hard. And this is where you gotta know your game. If you're just a passive investor and you just wanna own a piece of the American economy, all you wanna do is find a system to consistently keep buying because you wanna own for the long term. The day-to-day swings don't really matter. There's always gonna be reasons for it. Right now, there's a lot of political reasons for it. There's a lot of tariff reasons for it. There's a lot of other reasons causing it. But if you want to own the economy for the long term, what's happening in the day-to-day does not matter. You just want to own for the long term. So when you have sales, meaning down days, they create good buying opportunities because, well, nobody knows when the bottom is. No one knows if we're going to enter a recession. No one knows if we're going to see a market crash, but it can create a better buying opportunity. And this is where you just want to know what is your investing strategy. The alternative, if you don't want to be a passive investor, you want to be a little bit more involved, is to pay attention to what I call market shifts. This is for looking where there's more niche opportunities. You want to look for where the money is moving. You want to be more involved. You want to pay attention to specific companies. You want to look and read the earnings statements and find where is the money actually moving. And this is where, when you have this type of chaos, you have even more opportunities because money is moving very quickly. Now, I'm not talking about being a trader, because traders are trying to make money very quickly and they're just finding ways that hopefully if this and this happens that this stock is gonna pop off. That's gambling to me. That's not the game that I play. When I talk about investing, I'm talking about long-term investing, and this means looking for opportunities for good investments that have been beat down because of market factors. You find a good shift, you find a good industry, then you find a good company, and now you're trying to just find a good buy point. You're trying to see when this company gets beat down because people are scared. This company goes down because people are worried about the economy. They're worried about the industry. And that's when you can come in and buy. But it requires, number one, the emotional confidence to stay calm. Number 2, you have to have the money system to have the money to invest. Number 3, you have to know your own investing strategy. You have to know if you want to just be a passive investor and own a piece of the economy, or do you want to be more of an involved, active investor and you want to find the individual opportunities. And then you have to execute. Yes, it's risky. Yes, it's scary. But if you are an investor, remember, you're investing for the long term. If you were to go out and buy a house today, you wouldn't check the price of the house on Zillow in the afternoon to see what happened in the price movement, because that would just seem silly. Yet people do it with their stocks all the time. You understand that your house is a long-term investment, that a investment property is a long-term investment, so you're not going to be monitoring the price of that thing every single day. But with stocks, it's very easy to do so, and so it's very easy to get caught up into the day-to-day swings of that thing. But that's what caused so many people to sell when they shouldn't or buy when they shouldn't, because we get caught up in the emotions. And this is where I'm going to emphasize again, it's so important for you to, number 1, take a step back and understand what's happening and not get caught up in the emotions. Now, I get it. It can be hard to keep up with everything going on when things are changing so fast. Trust me, I know. I got a whole team helping me with this and things have been moving very fast. But this is where, again, it is helpful to have resources, to use resources, because there's a lot out there. Yeah, you can go out and read all the press statements and do all that. That is the best thing to do, but it takes a lot of time. Market Briefs is a free resource where my team is breaking down what's happening into a quick and free newsletter. Again, I have that link for you down in the description. And I'll be doing my best to keeping you updated here. But I want you to, number 1, work on staying calm, keep putting money aside to invest, work on figuring out your investment strategy, keep building your financial education, and then executing. You will lose sometimes. Mistakes are a part of the process. But understand that recessions and market crashes create more millionaires than any other time, because it's when the financially savvy can go out, find great investments at a discounted price. Yes, it's difficult because you're doing something that everybody else is telling you to run away from, but some of the best investments that I've ever made came through the 2022 market downturn, the 2020 pandemic crash, and the 2008 financial crisis. Yes, it's difficult, but if you believe in the long-term health of the economy, it can create a great buying opportunity for you. And with that, I'll see you on YouTube tomorrow.